Monday, April 1st, April Fool's Day. Market analysis, Stan Ehrlich. You guys know I start out with the indexes first, and this is no change. The spider, S&P 500, has challenged the highest high for the whole trend, and it was just made on Friday. So other than the current down about a point prices, we still have generally a very strong market on the surface, but we are very close to being overbought. And I have not seen the market do this in a very long number of years. We have been climbing since October. That's no surprise. It's the October lows. Told you in the last several Octobers that 90% of the time in the last 30 years, only 3 times has there not been a buying opportunity in October. We'll go into that as we get closer to October again. Now, this has climbed since October very steadily. November, December, January, February, March, 6 months. Now it's April 1st. Not very common, very unusual. The odds of it perpetuating for another substantial number of months are almost nil. So I'm waiting for sell signals and bearish engulfings in overbought conditions. I'm getting very close to overbought again, but not quite. We did have one back here on February 16th. It did work for a couple of days. That's fine. Plenty of opportunity to make a little money. We had another bearish engulfing that did not quite do the job. And I'm waiting for another one. So I'm looking for a top. The downside correction for the spider should be at least down to 497, but I'm really looking for 477. And now that we're at 522, that's a pretty good size break, 50 points. So it's not a small dip down like I was saying in January and maybe early February or March, but now it's pretty sizable. And I am looking for a move down to 477. Next, the 1 minute spider shows you we just made a little while ago the low of the day. And what I really want is for it to break down below the lows of 518, which is 508, excuse me, the lowest lows since about March 6th, almost a month now, not quite. And that would be considered a break of support and already be down close to closing the gap. But again, I'm afraid this is building a top a little bit larger than I was saying a few weeks ago. Okay, that's the 1 minute. Now the E-mini, and you guys can reach me at info@ersignals.com. That's INFO at ersignals.com. If you have any questions, comments, contributing, whatever. This is an outside down day in the E-mini currently. That's a bearish engulfing, but we are not, too bad, overbought within the last few days. Well, actually, that is correct, yes. So I'm not going to get a bearish engulfing out of this red ER sell signal, but I will get a bearish engulfing, and I do have one, period, at the moment. So that is bearish, but it's not quite the total picture that I like to have, and that's the combination of overbought conditions. This is my custom RSI at the bottom. I learned RSI from Wells Wilder himself. So close, very close, and maybe the signal I've been waiting for almost. Look at the 1 minute. This morning or last night, yesterday afternoon, market opened, popped up, and made new highs. Now we've gone down below easily and substantially the previous day's trading range lows, and that would be Friday's lows. So we do have that bearish engulfing. The only thing we're missing is the bullish condition within the last few days, and it's close, very close. So what can I say? No signal, but 99% there. What about the QQQ? Bearish engulfing? Well, we did, but right now we're back to higher than the previous Friday's close. So that's a bullish because we're net higher than the close of the previous day. Engulfing because today's high is higher and today's low is lower than the previous trading range day. So if we turn around and slip so that we're lower on the day instead of up a little, we'll have that bearish engulfing. Unfortunately, no overbought conditions, so we're not going to get a red bearish sell signal out of it like we did back here on February 16th. And again, a couple of days down very nicely. Next chart. Qs. Today's high is higher than Friday. We have already been below Friday's lows. We currently have an outside trading range, but slightly higher on the day. So it's actually a bullish engulfing, not a bearish. If it turns out to close below Friday's close, then we will have my bearish engulfing. And I'll feel a little more comfortable about something bearish starting. I am looking for a pretty good downside break here on the Qs, all the way down to close some old gaps at 412 or 13, let's call it. Yeah, 413 is a little better. And back to the 5-minute Qs. So the NASDAQ futures contract June also has a, at the moment, bearish engulfing because we are lower on the day and we've been higher and lower than Friday's high and low. That is in itself at the close, if we stay lower on the day, a sell signal. It can reverse. I don't think it's going to. I hope it doesn't. But if we have a bearish engulfing at the end of the day, good. Unfortunately, it's not overbought, and I'm not going to get a red signal out of it again, like we did back here on February 16th for the NASDAQ futures. And it worked for 3 days very nicely. We'll see what happens. Okay, 5-minute chart on the NASDAQ futures. You can see it was somewhat of a wild morning here. 6:20 California time, or 6:30, I should say. Probably some economic information came out that the market liked for 15 minutes. Popped all the way back up to the high of the day, which was made on the previous evening, Sunday afternoon, evening. And then went all the way back down to new lows, and we are still lower than we were before that information came out. So at this moment, the marketplace doesn't like it that much. In fact, it looks like a little bit of a last gasp of bullish information. So I'm very, very tentative, watching for signals here. I like what I see at the moment. Let's go to the Russell. Not quite the same thing. No higher high. But on Friday, it did make a new high for quite a few months and did not stay there. The closing price was below the previous high made only 2 or 3 weeks ago. That's not good. When you make higher highs, you want to stay above previous highs, and that's adding legitimacy to the break, or breakout, I should say. So this breakout failed at the close, and down we go today. Could be the start of something more bearish. And this is the 1-minute Russell 2000, coming down fairly well. Really need to close below 205, and that would kickstart something even more bearish. Now we go to bonds. Wow. I didn't expect to see limit down, but here we are, 62 ticks lower. And we've been there for a while, so we're kind of lock limit down at the moment, apparently. Notes are almost the same. So what news came out had something probably to do with interest rates, or interest rate move up a little or stable, instead of everybody expecting in the last month or two that rates are going to start to go down. But now they're talking about summer or maybe even late summer, and they keep pushing it back a little bit because the numbers aren't quite good enough for the Fed. But I agree, we're not going to start a bear market here. I don't think it's going to do anything but maybe make a new low and maybe stay in this downward slanting channel. And that's, in the end, bullish. So what I'm looking for is a buy signal, probably in minor new low ground near the low of this downward sliding channel. And that may be the last really great signal we get until we get new highs for the move. And that would be above 125, let's call it 126. That would be very bullish longer term. We did get a buy signal smack dab at the bottom of the bond market. I mean, my ER signals picked up on October 23rd, the low day, exclamation point. Great trade out of that. And here it is in the 10-year notes. The bottom of the market, again, October 23. Excellent trade using these particular inputs. Some people would call them settings is another good word. But the yellow dotted line is the trailing stop. We call it our STS, smart trailing stop. And it's controlled by a number we nickname the kicker. Kicker, if it's larger and larger, the stop moves smaller and smaller. It is not a moving average. It has to do with the way the market moves, yes, but also is influenced by relative strength numbers over time. So there are two features, neither of which are built-in techniques you find in most trading platforms. Great trade out of the notes and the bonds. I just didn't have it running in the bonds. The double top in the notes says we might come down to 109. The notes have been almost limit down and are trading very close to the low of the day, down 55/64, 63, so yeah, 64s. And it is almost making a new low. It's slightly bouncing off of the bottom of the support area. I did mention that I would expect it to be challenged, which here it is, but I didn't think it was going to all do it in a single day today, but here it is. I think it's going to be broken. Like bonds, you could draw a support line underneath the lows, the last since December. It would be potentially the bottom of some sort of down channel, but instead we have a double top, and the downside objective is, again, about 109. Let's see what happens. Looking for 109. Here's the 1-minute chart, 5-minute chart, sorry, on the notes. Coming down very substantially and starting at 5:10, 5:15. What about right in there this morning, California time, and down we go. So very close to the bottom of support. Look at the crude oil. Breaking out to the upside. Resistance level stopped it a couple of weeks ago. Dropped off, but still in that same support and resistance zone. It was resistance at the time because we were coming up to it from underneath, and it stopped at the top of the range. After coming down in the middle or so of the range, now today for the first time, and we're staying there so far. We're getting well above previous highs and well above that resistance area and a breakout of sorts. So I'm now looking for a move up in the crude oil to about 89.5, the next resistance area. Next, heating oil. Bullish engulfing price range for today. Let's spread this out a little bit so you can see that better. Okay, we're right around the opening, so the body is very small. But the wick high is higher than Friday, and today's wick low is lower than the low of Friday, and the current tick is up just a little bit. So outside up at the moment, looking good. I think I could expect to see a rally back up to about 2.74, 75, something like that in the next few days, maybe a week. Next, daily data on the natural gas. Oversold conditions starting to push it up. Nicely so. No signals, just barely getting back into the resistance area. So let's see how it handles this. This could turn itself into a fairly sloppy double bottom, not very accurate for the two lows, frankly, but some people might call it that. So let's see what happens when it gets up to about 2.00. and I think it's going to get there. Next, gold. Wow. Well, new highs for the trend up in gold. Looking for a sell signal. We are overbought again today, like we were about 6 days or so. And before that, which was March 21st, we were very, very, very overbought. So we have new highs in price a second time, but at the moment we have no new high in the oscillator, which is called divergence. Prices are diverging higher highs in price, but not higher highs in the indicator. That's frequently used as an indication that the market is about to head south. Divergence tops. In my experience, not the most reliable tool, but nevertheless is not to be ignored. We've got silver rallying also, but nowhere near the high at this point, and it's back to about where it opened. The silver market had a whopping bearish engulfing ER official sell signal on March 21st. Dropped off for a few days, so we had profitable trades after that. But starting on Friday, it rallied strongly, and the follow through today. So any previous shorts were out of, and I'm looking for another sell-off to make minor new lows below last week's lows, and that will cause me to stay in my bearish mode. Right now, I'm still bearish, but there's some question marks. I don't want this rally to go any further. I want it to drop down, starting to drop down on closing basis, and frankly, the highs and the lower lows, all of it, very soon, in order to maintain my bearish expectations, which are all the way down to the support area 23 and lower. Call it 23 and lower. Okay, platinum. Not doing much. Between the rock and a hard spot. We've been bouncing off the support area now for a week plus. And today's current quotes are down 9.1. So we might bounce off support a little more accurately. Today was very close again. And frankly, since we're not doing very well here when we should be, if it was going to rally good, I think the support area, we're going to make a little bit of new lows and sink into it a little bit more. High grade copper. Out of the trading range that is now support, used to be resistance, stopped it way back on December 1st, stopped it again on December 27, stopped it again on rallies in January 31, and basically came super close February 21 and bumped against it around March 8th. But a huge rally, March 13th, went up to it and through it, and even through the high of the resistance area all in one day, which is very unusual. And there was 1 or 2 or 3 days of upside follow through. So getting into overbought conditions, we did have a retracement back into support. No surprise. Starting Friday up a little bit, and today up a chunk more. That's it. Support held. We're starting to move up. I'm looking for a challenge for copper of 41.15 around the highs we saw only a couple of weeks ago, and probably higher. Next, soybeans, oil, meal, corn, and wheat. This is the 1-minute chart on soybeans, and I should change back, sorry, to the daily data chart, which I've been doing some little homework on that. And let's spread this out so we can tell what's going on here on the daily data chart. Come on, come on. Oh, come on. You're kidding me. Why am I having trouble doing this? I'm sorry. For some reason, oh, I know what's going on. The strategy, which is loaded and running, is recalculating, and there it is. Sorry about that. So we had a bearish engulfing ER sell signal official on Friday, but we have rallied just a little bit above Friday's high, killing any shorts. There was a very small profitable scalp trade, but the position trade held over during the weekend. We're out of small loss, and the combination of the two was probably several pennies worth of loss. Nothing terrible, but not good. Am I still going to get lower levels of soybeans? Because of the overbought conditions in the last couple of weeks, and because we have lower lows Friday than the previous couple of weeks, I do expect to see lower prices. I'm sorry that the high today made it above Friday's high to poke me out of a ER1 position trade. Again, ER1 scalp made a little bit. Oil, soybean oil, up a little today between a rock and a hard spot, looking for resistance to stop the rally, looking support to hold on the downside. Just 1 second. And I wanted to just check something. Good. Okay, so the soybean meal, oil, I keep doing that. I can't come to a conclusion. It's a bear trend. We've rallied. Probably going to fiddle around and start to slip off and make new lows. No pun intended, soybean oil slippage. All right, no, fine. Meal, pretty much the same comment. Now, support is substantial, but the bounce we had off of the support area didn't go too far, basically stopped at resistance. And here we are dropping like a rock out of that resistance area. So I'm fully expecting support to be tested again. Maybe this time we're not going to get a bullish engulfing at the very bottom like we did on February 29th. Great signal. Instead, well, we could get another buy signal, but instead I think we're going to sink off into the support area and maybe it'll get broken and the longer term bear trend is going to persist. But you have to watch it closely while it's in support. Corn, we got the bottom again. February 26th, exactly. That's why the body is green on this custom colored candlestick chart. White doesn't mean much to me one way or the other. Yellow means you were or are either overbought or oversold. As you're going down, you're probably getting oversold. If you're going up, you're probably getting overbought. Now that is very close, way back there in October of last year, to overbought, but not quite. So we didn't turn yellow. Then we got oversold below 25 on the RSI. That's my custom level. And a bullish engulfing. So there was a buy signal, which did not really work. It just barely made it up to the high of the signal day and then started to break down. That's too bad. This one worked pretty good. We got the low exactly. And we had 1, 2, 3, 4, 5, or 6 days up afterwards. Great. That one, not necessarily on January 30th, but that one's whopper. February 26th, the bottom so far. I have to be bearish on corn for the intermediate to long term because the major trend is still down. And you've got resistance above the market that stopped on Friday's rally high. And I'm just not getting any follow through on the upside yet for a longer term opinion. Bearish on corn, looking for a test of lows. Next is wheat. We bought the bottom of the wheat market again, like corn. And that was March 11th, sorry. And it is still the low. But like the other grains, there's a lot of resistance overhead. I don't see any major bottoms yet. I can't call a bottom the beginning of a long-term bull market in grain yet. There are some very faint potential signals or formations developing, maybe, but they're just not there. They're not worth talking about. I don't want to raise your hopes. Looks like neutral to down on all the grains on the average. And here's the 1 minute chart on wheat for today and the last couple of days, Thursday, Friday, and today. So nothing here. Daily data on cattle. We got a oversold condition, and a little bounce to resistance, and it stopped it so far. And now we're trading right here, coming down out of resistance. I think we're going to make new lows. And let me pull over here. Oh, this is hogs. Getting close to resistance, between a rock and a hard spot. Rally's pretty good today. It might go up a little bit more. Let's see what happens when it gets up to resistance, which is 88 3/4. And this is the April hogs. So we're going to roll over from the April to another contract month here pretty soon, most likely. June hogs, I believe. July. Okay. Now, we're going to switch to TradeStation because they're still having troubles with the ICE data feed, New York. The OJ, bullish engulfing, trying to break out of this pennant formation, and it may succeed in doing so. If we close where we are now, we'll be about the same or maybe a little higher than the highest previous closing prices. I really want to see it close above the previous highest high recently, and that'd be above 377, to be exact, 37700. And we're 373 and a quarter at the moment. So looking for more strength here. It looks like OJ is starting to break out of this pennant to the upside. We've got the cocoa incredible. I understand that there is trouble with the crop. It's getting damaged because of some disease, I believe. I'm not a fundamentalist, so I heard it from the grapevine. Some other people sent me emails about the condition of the cocoa crop, and obviously it's getting damaged badly, hence the whopping bull market. But before the fundamentals actually change, I think I'll be able to guide you in the right direction, which is going to be back down, but I have to wait. This could get stronger, quicker, faster. Next, coffee. Again, a pennant, fairly nice one at the top of it, close to overbought. So what's wrong with it flipping back down to the bottom of the pennant again? I think that's what we're about to see, but no big move here. Got to wait for a breakout. And sugar broke a bear trend line, rallying nicely. If we can come down to this previous bear trend line and bounce off of it and start to make new highs again, I may be able to get a buy signal. Probably not. We're too close to overbought right now. But that'll tell me that the trend line is functioning properly and that the market is probably going to go all the way up to this resistance area of 23.5, and we'll see what happens then. So I'm looking for 23.5 with or without a little retracement, which would be back to the line, that line there. Next, cotton, head and shoulder top. Exactly the same number of days from the first shoulder to the head, and then from the head to the last shoulder. Perfect symmetry. Came down to the neckline, bounced off it for a couple of days, broke below it. Classic downside breakout. Could have been a little weaker, faster, but that's adequate. Bounced back to the resistance level, the neckline, stopped, came down, closed below it. No false moves except for a little rally above it for a short while, and that was on the 18th of March. Ever since that day, one lower close, 2, 3, 4, and then one up, 2 up, and then big downside move on Thursday last week, new low for the trend down, and now we're bouncing again a little bit. We've gotten close to oversold, but not quite. So you would expect some bouncing around in here, but you have to be bearish. The minimum downside objective is about 83. And lastly, RBOB, I've already mentioned it, I believe, downward slanting channel. Look for this to break through the channel to the upside, and I'll have another bullish opinion for you if we can break out of the channel to the upside. Thank you very much. Have a great trading day.